Hello friends, and welcome to the video where I'm going to talk about likely support and resistance levels for Nifty for next week. So let's start the discussion with a little broader view on Nifty. Let's look at the weekly candlestick charts for the Nifty, and that will show you very clearly that Nifty has been following a particular wedge since the September of 18 when it actually formed the top of the wedge. You can see it retracing to the bottom, consolidating a little in the middle. Again, the top, the bottom, the top. This is where Nifty made its previous all-time high of 12,430. And after a little bit of retracement, this is the situation. This is the time when coronavirus became aggressive, and people started noticing its likely effect on the global economy. So that's where Nifty retraced, and let's see. The moment it broke out of this wedge, it fell around 30-35% in just 2 weeks to reach to the lows of 7,500. From there, it has been steadily clinching back the lost ground, and around July 2020, when most of the companies' first quarter results were out and impact of coronavirus got discounted into the pricing of the stocks, that is when Nifty started entering again into its original wedge. With few failed attempts of around a month, which are these four, seen Nifty entering into this wedge, again retracing a little bit, and then you can see it entered with a bang, created a very bullish candle with the base just above this particular wedge, and after a few weeks of consolidation at the bottom, it retested the bottom of the wedge, and just 2 weeks upswing, and it has reached to the top of the wedge. Now let us look at the most important part, that last week how Nifty has reacted at the top side of this particular wedge. Some could say it is a bullish sign with a hammer pattern at the top. Some could say because the hammer is red, it shows the impending reversal in the index. Uh, to understand this situation much better, let us look at this last week in a more detailed manner. So, a daily chart. What has happened in the last week is Nifty has successfully crossed over with a gap up, could not sustain a higher level but still ended above the top of the wedge. Next day, gap down, and a little bit of selling which got bought into, and Nifty made a high above this wedge and closed there. This was the first sign of strength. But immediately following day, you can see Nifty gave up all of its previous day's gains, could not hold on to the top of this wedge, also could not hold on to the top of the upward rising channel from where Nifty has started increasing from the coronavirus lows. So that's the black line. So could not really hold on to the black line or the blue line, and gave a closing considerably lower. Then the last trading day, Nifty came near its 21 days EMA, caught a little bit of buying during the last hour of the trade, and again tried to test these two tops. But let us look at it at the 5 minutes level, and you'll see that even though it tried to take out both these levels, it actually could not, and Nifty ended lower from both these levels. Now let us look at last few days in the 5 minutes interval as well, and you'll be able to see a clear sideways movement, which could also be an indication of the distribution of stock at the higher level, and you could see a strong reversal from these levels to touch the bottom part of the wedge. Nifty is able to demonstrate the strength and close above these two layer lines, which is 12,890, so more than 12,900, and preferably more than the previous high of 12,960. Then you could easily say that the Nifty has successfully broken out of this wedge, and now we'll see the levels of another 12 to 1300 points rise. Why? Because whenever the wedge is broken or has a breakout, you can expect the next level to be equivalent to the width of the wedge. So here you can see the the width of the wedge is around 12 to 1300 points. So that is what you would expect after Nifty breaks the previous high, the recent highs of 12,960. So you could easily look at the levels of 14,000 and above, and that will be if FIIs continue to buy the way they have been buying over last 10 days. However, if this is to be believed as a sort of a distribution move, then Nifty could fall back to the lower end of the channel. Now, another reason why the retracement looks more likely than the upside movement is from this, after this movement, Nifty has actually left two huge gaps to be filled. If Nifty does not fill these gaps right away, this could be a runaway gap, and you would have to see Nifty retrace back to these levels after it climbs the highs of 14,000, and that will be a catastrophic um, catastrophic correction in Nifty. Therefore, it only makes sense for Nifty to retrace at these levels, take out the bulls, maybe create a bearish scenario around this level, trap the bears here, take a support from this wedge, and then jump upwards to the 14,000 levels. So all in all, mid mid to longer term, the Nifty is extremely bullish. The shorter term view depends on how Nifty reacts over Monday or Tuesday and which levels it's able to hold on to. Thank you friends, and don't forget to subscribe and like the video.